Hey guys, welcome back to another video. Today I want to provide a quick update on the Onchain Risk Composite, an indicator on chartinspect.com that basically combines multiple on-chain Bitcoin indicators into one single reading. And more importantly, I want to talk about what it's telling us about where Bitcoin could be headed next. And so let's dive into the chart. So real quick, what is this indicator? Basically, we're taking different on-chain metrics, new pull, long-term holder, profit to volatility ratio, supply and profit and loss, the realized profit and loss ratio, and the market cap to thermal cap ratio, and basically combining them into one 0 to 1 reading. And you can customize which metrics are included using these sliders at the top. I default to these 5 indicators because they give a pretty good overall picture of Bitcoin's current market conditions. So basically, when this indicator is near 1, that basically means Bitcoin is overheated. That's when cycle tops can tend to occur. When it's near 0, on the other hand, Bitcoin is pretty much oversold. These have historically been pretty good times to accumulate Bitcoin. And so during the 2017 bull market, risk was nearing this 1 area. In the 2021 peaks, near 1 again. So same thing. 2022, the bottom, we were down to around 0.1 to 0.2 in the blue region. And you can see these bands here as well. Those show statistical deviations, so standard deviations on the actual data set here. When we're above the red line, basically the +1 standard deviation, we're in historically elevated risk territory. And when we're below this green line here, or below around 0.26 right now, I think it is, that historically means we're in low risk accumulation zones, right? So the gray line in the middle is like the average, the mean of the data set. It's currently sitting around 0.5. So where are we right now? We are around 0.5 on this risk level right now. Bitcoin is currently at around 93,500, and the on-chain risk composite metric is sitting around the middle, so 0.5, right around the mean. And so when this indicator hits the mean after coming down from these elevated levels, it can sometimes signal that Bitcoin is oversold in the near term, right? It's not a glaringly obvious like a buy indicator, like when we're down to below the -1 standard deviation, the green level. But after significant drop events, hitting the middle often can precede these bounces that we've seen. So we saw in 2021, we saw somewhat of a bounce there. When we went below the mean in 2013, we also saw somewhat of a mean reversion bounce from the mean, right? So both of these indicators, the true market mean and the on-chain risk metric that we've been talking about for quite some time, have acted as a good support for this bounce we've been seeing from around $80,000. And now I want to show you something pretty important about how this indicator behaves during these correction phases. So in summer 2021, when Bitcoin dropped from around $63,000 to $29,000 in the summer, the on-chain risk composite came down significantly from these elevated levels, around 0.95 to around 0.5, right? So typically that preceded, that did precede the bounce up to 69K, but the key difference was that in 2021, we were in the middle of the post-halving year around June, July. That was the mid-year, not Q4, where we saw the actual top for 2021 and where we saw the high of $126,000 in October for this cycle. So right now we are in the Q4 year of the post-halving year, December 2025, and historically Q4 of the post-halving year, you know how it goes, has marked cycle tops. 2017 topped in December, 2021 topped in November, and we potentially have topped in October 2025 at 126K. I'm still personally adhering to this Fourier cycle theory unless we start to see a major deviation. That's just my opinion. You can do whatever you want, right? This data just shows what's happening at any given time on chain, not necessarily what opinion you have about the cycles or any other theories, right? So while we're seeing similar indicators on the true market mean and the on-chain risk composite hitting these lower support levels, the true market mean holding, the on-chain risk in the middle, the timing is very different compared to summer of 2021. We're not in the middle of a bull run where there's potentially months of upside ahead. We're potentially at the tail end of one, in my opinion. So in 2017, when Bitcoin topped at around $20,000, the on-chain risk was near 1. And then it fell all the way down through 2018. It fell all the way down into that green accumulation zone, right? That entire year was a bear market. Same pattern in 2022, 2021, 2022. The top was in November. And then the whole year following that, preceding that, the entire year was a corrective year. And same thing in 2013 as well. So let me be very clear about my overall view here. I still think 2026 will be a corrective year for Bitcoin. I've been saying that for months now. The cycle, the mid-year cycle pattern is a bit too consistent. 2014, 2018, 2022, and now potentially 2026, right? I think, however, we could see a bull trap from here, right? So where we got that bounce from $80,000, which, we already got, and then we rally higher potentially. Maybe we see a push to 100K, maybe even 105. But unless we actually break above 115K, 110K, and hold it with conviction, my base case is that Bitcoin puts in a lower high than the high of 126K that we saw in October. And then we would sort of see it roll over as we get into Q1 of 2026. So 110K is pretty much the key level for me, 115, 110K. That was the previous all-time high from January and December before we broke out to 126K in October, right, when we saw the final push up to 126K. And it's also where we consolidated for months before that final push. And so if we can't break above that and hold it, then we're gonna make a lower high, right? And lower highs plus lower lows, that would be a textbook, scenario of a downtrend. For the timing, why I think this is the likely scenario. So I think the timing is one thing, the Q4 of post-halving year. But secondly, long-term holders are continuing to distribute. And so I went over another chart, what was it called? The net position, hodler net position change. And so I went over that in my last video, right? The net position change is still showing negative flows around $5,000 to $7,000 Bitcoin per day. They're still selling, right? They're still moving Bitcoin out of their wallets. That could be for whatever reason, either consolidating UTXOs or moving to exchanges, right? In general, it does precede cycle tops, right? Even though it doesn't necessarily mean they're selling. Obviously, it just means people are moving Bitcoin on chain. It has preceded market cycle tops in the past, right? So same thing for accumulation events, right? During the entire 2018 bear market, we saw major accumulation. Same thing in 2016, 2015, 2014, 2022 as well. And so this is the second indicator that I think shows us that it is a likely scenario that we will see a lower high. And then thirdly, the momentum indicators, which I talked about in the last video, are still pointed to the downside. Short-term holder SOPR momentum, long-term holder profit to volatility momentum, MVRV momentum. Most of these flip negative around 110 to 115K and haven't yet recovered back into the positive momentum territory. You can check those charts on the website if you want. And then fourth of all, we broke below the MVRV mean at 103K. That's been a pretty reliable signal in the past that the parabolic phase is over. So putting all these things together, the timing, the distribution that we're seeing from long-term holders, the momentum breakdown, breaking key support levels, right? They all suggest to me at least that we've been in a late cycle distribution phase, not the middle of a bull run, right? Now could I be wrong? Absolutely. If we break above 110 to 115K and hold it as support, if long-term holders stop distributing, if momentum flips back to the upside and to the positive, then I would reassess. But right now, that's not what the data is showing me. So what am I looking for from now on? So over the next few weeks, if we start to near 110K here, I do think we'd see it roll over from that level and act as resistance. I'll be watching very closely to how we react there. Do we get rejected? Do long-term holders accelerate the distributions, or do they slow it down? Does the on-chain risk metric start dropping again? If we get a clear rejection from those levels, especially if we can't touch above 110, 115K, that would confirm the lower high scenario in my mind. So the pattern would essentially be, bounce from 80K, rally to 100K, then get essentially rejected, and then start making our way a little bit lower. That would be the bull trap scenario. And if we do start heading lower after that potential bounce, I'll be watching where a lot of the metrics on the website start to go to. If we drop towards 0.3 into that green area here for the on-chain metric, for the on-chain risk metric, that'd be getting into better accumulation territories, right? If it goes below 0.26, which is where the -1 standard deviation is, below the green line, that's when we're historically in deep value territory, right? That's also when I'll probably start to come out on the videos and start to say, specific price targets and bottoming zones. But right now we're sort of in this middle zone still. Bitcoin could potentially bounce, could chop around a little bit here. I think making bear market bottom predictions is a bit premature at this point, but if it drops below to around 0.2, 0.3, then we can look at historical precedent and say, okay, when risk was this low in the past, Bitcoin was at these prices relative to these metrics. It doesn't necessarily have to go down to 0, right? I personally think anywhere below 0.2 to 0.3 is probably a pretty good accumulation zone. I know a lot of people don't even want to imagine 2026 might be a corrective year, but I'd rather be realistic and prepare for what's likely to happen based on the data, rather than get caught off guard hoping for what could be possible potentially. Even if 2026 is a corrective year, even if it's the worst year of our lives, then it's simply another year to accumulate Bitcoin, right? If you're holding for the long term, I think being cautious, or if you're holding for the long term, accumulating during these down periods, you'll probably do very well. But over the next 3 to 6 months on a shorter term time frame basis, I think being cautious makes more sense. I think watching for that potential bull market trap is also something to watch for there. So that's my view. I could be completely wrong, but I do think that is a pretty good scenario in my mind, at least a logical one at least. We'll see how it plays out. That's why I'm flexible in watching these indicators pretty closely. All these indicators, the MVRV, the long-term holder distribution, momentum indicators, you can check all these charts out on the website. They're free at chartandspec.com. Some of the metrics are pro and they're premium, but you can also set alerts for most of the metrics there if you're a pro member. And also I want to mention that pro members can now join our private Telegram group there. So if you're a pro member, go ahead and join us in the group if you'd like. And I will see you guys in the next one. Thank you guys for watching. If you found this perspective helpful, then hit the like, subscribe, and comment in the comment section below. Thanks for watching, and I'll see you guys in the next one. Bye.